Thank you all for joining us this afternoon, and welcome to the GASB 101 webinar hosted by Dean Dorton. This afternoon, we have Simon presenting. He's one of our assurance directors here. If you are just now joining, this does qualify for CPE credit. Please scan the QR code listed here and fill out your information to get 1 hour of CPE credit. There will be code words, which are actually code numbers, throughout the presentation. Please enter those in. Simon will share them with you during the presentation. We will be taking questions live, so please feel free to use the Q&A functionality to enter those questions. And with that, I'm going to turn it over to Simon. Simon, you can take it away.
Okay, thanks very much. So good afternoon, everybody. I'm Simon Keemer. I'm an assurance director here in Dean Dorton's Louisville office. I do a lot of work in the GASB governmental higher ed space. And so today we're going to be looking at GASB 101. So kind of our objectives here are to focus more on the implementation of GASB 101 rather than necessarily going through a more esoteric discussion of the technicalities of 101. Hopefully, most of you on this call today have had numerous presentations on what the standard actually says, and you've got a grasp of at some level of the wording within GASB 101. So we're going to focus today a little bit more on how you take the 101 wording and actually try to implement it and measure these compensated absences actually within your financial statements. So a brief overview, high level of the statement. It's effective for fiscal years beginning after December 15, 2023. My assumption is most, if not all of the people on the call this afternoon are probably June 30 year ends. So you're looking at compensated absences under 101 being implemented for your June 30, 2025 financial statements. It does supersede GASB 16. So any of you that want to understand what are we doing now compared to what we used to do, you can always go back to GASB 16 and look at what GASB 16 said and see how it's changed. But we're not going to go through in detail this afternoon what the changes are between GASB 16 and GASB 101. So the big picture, what the GASB was aiming to do with 101 was to create a more consistent accounting for compensated absences and to create a unified recognition of measurement framework for compensated absences as they exist in a more general term rather than looking at individual types of compensated absences and creating rules for each type of absence. So when we talk about compensated absences, the kind of thing we need to keep top of mind at all times when we're trying to analyze what leave policies do and don't count under GASB 101, we need to consider this definition. So you're looking at leave that entitles employees to be off work and receive either cash payments when they use that leave for time off, or they could receive other cash payments. For example, it could be paid upon termination of employment, or there could be some non-cash settlements. And the one that's discussed most often is that those leave accruals are converted to a defined benefit post-employment benefit, most frequently converted into additional service periods for vesting and things like that. So implementation of GASB 101 really has three main steps to it in the first year. Once you've gone through the first year, then obviously you can just roll forward what you've been doing. But in the first year, the implementation of GASB 101, really the three steps. First off is to look at the policies that the organization has, what leave is offered under those policies, and try to determine which leave requires accrual and when that accrual is recognized. We'll see a little bit later that there's kind of three buckets that leave is going to fall into. Your compensated absences is going to fall into one of those three buckets. So kind of the first step is to go through all of the policies you have, all of the leave policies, the compensated absences, and decide which bucket they fall into, because that's going to tell you whether it requires accrual or not, and when that accrual is recognized. Once you've done that, step 2 is then going to focus in on any leave that requires accrual as it is earned. And so what step 2 does is it takes that leave and then looks at how you analyze what is more likely than not the amount of leave that will need to be accrued. So you're only going to accrue leave that is more likely than not going to be used, and you won't have an accrual for leave that is unlikely to be used or paid or settled. Once we've done that, we move into step 3, and step 3 becomes kind of a mechanical process of measuring the accrual for compensated absences at the reporting period end, and that's basically going to be the hours that have been earned by employees as of the reporting date, multiply that by their current pay rates, unless different pay rates will be used, but generally you're going to be using current pay rates, and then multiplying that by the more likely than not amount that will be used, paid, or settled, and that will then calculate the accrual that's going to be in the financial statements. So we come to our first code word or code number. So hopefully you've got the app from the QR code at the beginning, or the QR code is showing there if you still need to log into Conferences.io, and you can just enter 113 and that will log that you've identified that code word. So that is 113. Okay, I'm going to assume people have had a chance to enter that, so we will move on. So let's look at step 1, identifying leave that needs to be accrued. So in essence, GASB 101 has 3 recognition criteria that the leave needs to meet in order for it to be accrued at the end of the reporting period. So first off, we have the criteria called attributable, which in essence means that employees must have already performed the services necessary in order to earn the leave. We're only going to accrue leave that has been earned by employees. The next is accumulates, which leave must be carried forward to a future reporting period. So this kind of replaces what we used to call vests, that the leave would vest. Now we talk about leave accumulating. So in essence, in order to be able to accrue, or in order to have an accrual at the end of the reporting period, any leave that's been accrued must be carried forward to a future reporting period. And so one area to be careful with here is, for example, maybe you have a use it or lose it policy, and you're like, well, okay, leave is not carrying forward to a future reporting period because we have a use it or lose it policy. However, if your use it or lose it is based upon a calendar year, but you're actually a June year end, then technically, as of June 30, 2025, as an example, there would be 6 months after the year end, but before the end of the calendar year, when employees would lose any leave that they haven't used. So you do at June 30, 2025, have leave that is going to be carried forward to a future reporting period, even though that only carries forward into one period, i.e. that first 6 months of your June 30, 2025 2026 year end. So just be careful with use it or lose it policies to make sure that you're really looking at, well, when do employees lose it? And if they lose it after my current year end, then that leave is carrying forward, albeit for a very short period, and you would potentially still have an accrual there at your financial reporting end. And then, as we've already discussed, more likely than not, the leave must be more likely than not to be used, paid, or settled. So when we're talking more likely than not, we're talking greater than a 50% likelihood that the leave will be used, paid, or settled at some point in those future reporting periods. Any leave that doesn't meet the more likely than not threshold will not be accrued. So in terms of types of compensated absences, we've really got three buckets coming out of GASB 101. We have a group of leave or compensated absences which are accrued when earned. So it doesn't matter when the leave will be taken at some point in the future. As it's earned, we're going to accrue it, and we'll reduce our accrual in future periods as those compensated absences are used. Then our next bucket is we're going to accrue only when the leave commences. So employees may be earning these types of leave, but we're not going to accrue them until they actually start the leave that applies to this bucket. So in essence, your expense accrual is not going to be recognized when the employee earns it. It's going to be recognized when the employee actually commences that leave. And then as soon as they commence it, the full amount of the leave that they're going to be used will be accrued. And then the last bucket is we're going to recognize expense as the leave is taken. So in essence, it's going to follow your normal payroll expense cycle that, the employee is taking the leave, they're being paid for that leave through the normal payroll. And so you will recognize that expense based upon when you're recognizing that payroll expense. So you could, for example, have an accrual if you've got a 2-week payroll that spans your year end. For example, let's say it's a 2-week payroll, a week of that payroll is before the year end, a week of that payroll is after that weekend, then you're gonna after that year end, and so you will accrue that first week of the payroll. And so any leave that's included in that payroll is in essence becoming an accrual at that point. But really you're recognizing the expense for this type of leave in the same manner as you recognize your normal payroll expense. So looking at examples of accrued when earned. So really the big one that everybody talks about is paid time off, vacation, sick leave, whatever your organization calls that type of leave. That's the normal 2 weeks or 4 weeks, whatever you offer of PTO, vacation, sick leave. You're going to accrue that as it's earned. The next bucket, which is particularly of interest to a lot of higher ed organizations, is sabbatical leave. So sabbatical leave actually gets put into 2 buckets. The first bucket we have here, which is unrestricted sabbatical leave. So the concept behind unrestricted sabbatical leave is that you allow your employees to go on sabbatical leave, but you don't have any requirement for them to perform duties for the organization while they're away. It's completely unrestricted. They go off and they can do whatever they like during that sabbatical leave. The other area of leave which gets caught under accrued when earned, which I think is not necessarily as prevalent of the other two, is time off in lieu or toil or compensatory time. The concept here is that employees are working overtime hours at some point during the year, which they can use as extra time off at a later point in the year instead of receiving additional pay. So if you've got any toil or compensatory time, that would also fall under the accrued when earned. So they're the three big items in the accrue when earned. Moving on to examples of accrued when the leave commences. So the general definition within GASB 101 for leave accrued when the leave commences is leave that is, in quotes, dependent upon sporadic events that affects a relatively small proportion of employees. That's the definition that they gave in 101. And then they go on to provide some examples. We've provided a few more examples on this list that are in GASB 101, but it's items like bereavement leave, parental leave, which are if you're offering leave for families that adopt or take on foster children, that would also fall under kind of the bracket of parental leave. Military leave, but again, that has two buckets. So this military leave is more for those employees that are in the National Guard, that kind of stuff. Court leave and jury duty, if you've got workers going on workers' compensation leave, that they got injured or something like that, or if you've got employees that are placed on administrative leave for whatever reasons, those are the leaves that would fall under this definition of dependent upon sporadic events that affect a relatively small proportion of employees. So those would actually be accrued when leave commences. So as an example, if you say for bereavement leave, for example, if somebody has a death in the family, you will give them 1 week of leave for bereavement leave. Then on the very first day when that leave commences, you would accrue the full week for the bereavement leave, because that's policy is to give them a week. If you give them 2 weeks, then the very first day they go out on leave, you would accrue 2 weeks for that employee. But the day the leave commences, you accrue the total amount of the leave that employee is entitled to receive. Now, we've got a caveat here in italics, which is a lot of this stuff, a lot of these and this analysis for GASB 101, you can end up going down a rabbit hole and you can end up doing very complex calculations that take a lot of time to calculate. So the caveat here is GASB 101, like any GASB standard, only applies to material items. So if you've got this leave in your administrative policies, but stepping back, you consider that any person on any of these leave types at the end of your reporting period, add it all together, it would not be material. You can have an accounting policy that this is not going to be material. We're not going to calculate this, and just save yourself some time and effort. Now, I would say, even if you're going to have that accounting policy, you do need at every reporting period to step back and make sure that you confirm that these leaves would not be material, to make sure that you're not missing anything at any point in time when you're actually issuing financial statements. But I would say in most cases, for most organizations, this type of leave is not going to be material at the end of the year, primarily because all of these leaves are probably short-term in nature. You probably don't have many people taking them and in the middle of them at the end of your fiscal year end. So you can kind of skip doing calculations for these as long as you're comfortable that they are not material to the financial statements, and you can document that you've done some form of high-level review to kind of corroborate that they would not be material. So there is a little bit of an escape route there, so you're not having to do a bunch of calculations on a whole bunch of people taking various different leaps. The final bucket is the examples of recognize as taken. So the previous slide, the recognize when they commence. If you decide it's not material, then it would all just fall into this bucket of recognize as it is taken. So in essence, you're going to recognize the expense through your normal payroll process. So as people are paid for these leaves is when you're going to actually expense them. So the main ones under this category is holidays, but just be careful if you do have floating holidays that are taken at the employee's discretion. Those floating holidays would actually be under the first bucket, accrued as earned. They would not be considered holidays to recognize as taken under this bucket. If you are offering unlimited PTO, so if you have unlimited PTO, the PTO in the first bucket would not be recognized as earned. It would actually drop into this bucket as recognize the expense when taken. Any short-term or long-term disability is going to be recognized when it's taken. The second bucket of sabbatical leave is included in this bucket of leave. So this sabbatical leave is defined as when the employee is required to perform duties for the organization while away. So, for example, it's sabbatical leave where the faculty is required to perform research instead of teaching. So they're really just getting a sabbatical from teaching in order to perform research. So because they are considered to still be, in quotes, providing services to your organization, it is included in this bucket that you recognize the expense as the sabbatical leave is taken, and it is not included in the first bucket of recognizing it as earned. And then the final area here is also the second bucket of that military leave, where this is actually active duty military leave. So the other military leave, which was for like the National Guard type leave, that was in the recognize when leave commences, and then active duty military leave falls under the recognize as it is taken, and so expensing it as you expense your normal payroll through your normal payroll process. So they're the three buckets of leave that in step one, as you're going through all of the types of leave that you offer your employees, you're going to be putting them into one of those three buckets. So at the end of step one, where you should be is you should now have a very good understanding of the various leave policies in the organization and which buckets under GASB 101 they fall under. And so then before we move on to step two, what we're now going to do is focus on just that leave that is in that first bucket, which is accrued when earned. So step two is only going to apply to that first bucket of accrue the leave when it is earned. So step two is what I like to call the more likely than not analysis. So as I said, it's only for the accrued when earned leave. The analysis is likely not applicable for the other two buckets because you probably don't have a more likely than not analysis to perform. So if we take the recognizing leave when it commences, if somebody goes out on jury duty for a week, you're probably 100% certain that they're going to take a week for that jury duty. So there is no more likely than not analysis you need to perform. You know it's going to be a week, and that's why that leave doesn't fall under this more likely than not analysis. It's just assumed that leave will be 100% taken. And so when you're thinking about step 2 and what do I need to do the analysis, just keep in mind that the analysis is designed to meet the requirement to recognize an accrual for leave that is more likely than not to be used, paid, or settled. And there are many different ways that you can go in order to do this analysis, but just keep that top of mind is the whole point of doing this analysis is to determine at any point in time, like as of my fiscal year end, I've got a bunch of hours that everybody has accrued that I need to accrue on my balance sheet as they earn it, but how much of those hours is more likely than not going to be used, paid, or settled. And so again, there is a shortcut that you can use if your administrative policies lean this way. So if you have a policy of for a certain type of leave, and this doesn't have to be for every type of leave that's being accrued, you do it by buckets. So if you've got vacations separate from sick leave, you deal with vacation separately from sick leave. So maybe your vacation policy is you get this much per year that you work here, and if you terminate employment, 100% of the leave that you haven't used will get paid out at your pay rate at that date. So you now know, because of that policy, 100% of the vacation hours accrued by an employee is either going to be used by the employee or it is going to be paid out when they terminate. So I have my more likely than not is 100% of that leave is going to be accrued because it's either going to be used or paid. Now, you do have to be careful if your policies are, well, any leave that you have accrued when you terminate employment, we will pay out at 50% of the unused balance or 50% of the pay rate at termination. Now, you do have to do this more likely than not analysis because now you've got this difference between, well, 100% of it is not going to be used or paid. There's going to be a bucket of it that is used that gets paid out at 100%, and then another bucket that is going to get paid upon termination, which will only be 50%. And you're going to need to know, how do I split that between what do I accrue at 100% versus what do I accrue at 50%? So just because it's paid out upon termination doesn't necessarily give you the shortcut unless you pay it out at 100% of the leave balance. So then there's also this wrinkle in GASB 101 that talks about if unused leave is settled through conversion to a defined benefit post-employment benefit. So, a defined benefit pension or OPEB plan. So the portion that is more likely than not going to be converted doesn't get accrued because GASB 101 says any unused leave that is settled through conversion to a defined benefit pension or OPEB plan does not get accrued as compensated absences because that is considered to be included in the pension or OPEB liability. So you're not going to accrue under 101 any leave that gets converted. However, you do need to accrue any of that leave that would be paid prior to conversion. So let's say, for example, you've got a policy that says for sick leave, you get this much per year, and you can accrue it and you can use it. And then when you terminate employment, any unused sick leave will get converted to extra service period within the pension or OPEB plan. What you have to do is you have to say, well, of this sick leave, how much of it is going to be used by the employees prior to them terminating employment. And that sick leave that's going to be used prior to termination is paid to the employee and does require accrual under GASB 101. So I've got all of this sick leave, and let's say I say, well, 50% of it, based upon the analysis I've done, 50% of it will be used prior to termination, and the other 50%, which won't be used, and at termination will be converted to the defined benefit pension and OPEB plan. I need to accrue for the 50% that will be used, and I do not have an accrual for the 50% of the balance that will be converted to the defined benefit pension and OPEB plan. One of the pitfalls that people can fall into is to try and shortcut that and say, oh, well, my sick leave upon termination converts to the defined pension or OPEB plan, therefore under GASB 101, I don't need to accrue that. And so they don't accrue any of their sick leave. And that actually gets you to the wrong answer. You do have to accrue for the portion of the sick leave that would be used, or more likely than not to be used, by employees prior to them terminating and converting. I hope that makes that clear. So now let's look at what this more likely than not analysis should entail. So generally, what we see people doing is looking at historical usage and payment patterns. So you'll go back through historical data and determine kind of how much of each individual leave is being used. So even though at the start in step one, we had 3 main buckets, you can't just take the accrue when earned bucket and treat all leave the same. What you have to do is when you did step 1 and you went through the analysis, maybe you said, okay, we have vacation pay that falls under accrued when earned. We have sick pay that falls under accrued when earned, and we have sabbatical, unrestricted sabbatical that also falls under accrued when earned. So now when you get to this more likely than not analysis, I have 3 separate buckets that I need to analyze. I need to analyze my vacation pay, and then I need to analyze my sick pay, and then I need to analyze my unrestricted sabbatical pay. You don't just take the accrued when earned bucket and apply the same rates to everything. Each rate should have, or each type of leave should have its own analysis, so that you can say, okay, generally, based upon my analysis, my vacation pay has a usage of about 60%. And so of the vacation hours accrued at the end of the fiscal year end, 60% of that is going to go into the accrual. My sick pay, I only have about a 25% usage on that. So now at my fiscal year end, I'm going to add up all of my sick pay, and only 25% of that will feed into the accrual. And my sabbatical, unrestricted sabbatical, that has a usage of 40%. So again, at the end of the fiscal year, I'm going to add up what everybody has earned for unrestricted sabbatical pay, and I'm going to recognize accrual for 40% of that. So you will calculate a percentage usage for each of these buckets. But when you're looking at historical usage and payment patterns, you also want to consider, have my employment policies changed at all over that historical period, such that it would change my go-forward percentage usage? Do I have, you want to look at also eligibility for use versus future payment, and are there any changes in those requirements that I need to consider? So basically what we're saying is we're going to calculate our historical usage and payment patterns, and then we're going to step back and say, okay, do I need to adjust these historical trends to reflect any changes that I currently have, i.e. my current reality, or any changes that I think could impact the future? And then adjust those historical usage patterns based upon that information to get to what is your more likely than not amount of the leave that's going to be used. In terms of historical period to use, what we're seeing is 2 to 5 years is the most common. I see 2-3 years being the most common, and people really not going back more than 5 years. If you go back more than 5 years, now potentially you're getting into COVID years, which is where again you would have, well, hang on a minute, if I include 2020 and potentially even 2021, the historical data I'm getting from those 2 years are being potentially impacted by COVID. Therefore, those historical usage or payment patterns in 2020 and 21 are probably not going to be reflective of my current reality or my expectations for the future. So you could go back 5 years and then try and do an adjustment, or you could say, I'm not going back 5 years, I'm only going to go back 2 years because I want to be distanced from those COVID years that are impacting what I believe my current reality and future state would be. The other thing you want to start thinking about as well in terms of this analysis and how detailed you want to do it is, what is my level of materiality, and how sensitive is the calculation to that materiality? Because you could spend months doing very sophisticated historical data based upon individual employees, and doing it by month and having this huge Excel spreadsheet. But at the end of the day, is your calculation really that sensitive compared to your materiality that you need to do that level of detail? And so one of the things I counsel my clients is, look at your accrued leave at the end of the fiscal year and say, if I accrued 100% of this, how much would that accrual be? And how does that compare to my materiality? And based upon that analysis, you could then go back and say, okay, so this is the level of detail I need to do to look at my historical usage. And it could be the fact that you say, okay, I think my materiality is $2 million. If I value all of my leave at the end of the reporting period, it's 2.2 million. Well, I'm only $200,000 above my materiality. So do I really need to do a highly in-depth historical analysis, or can I do something that's more summarized and easier to maintain that gets me kind of a ballpark what my historical usage or payment patterns are, so that I can apply that, and maybe that drops me down to, like, I need to accrue 1.8 million. If I did a huge analysis and spent months doing it, would it get me down to 1.5? Maybe. But do you really care about the difference between 1.8 million accrual and 1.5 million accrual when your materiality is 2 million, and really, everything is an estimate anyway? So keep in mind your level of materiality, what would be material, and how sensitive is any calculation going to be to that level of materiality. If you have a membership to the GFOA does have tools available to help with this analysis. I just saw somebody ask about a second code yet. We don't have a second code yet, so we'll get there in just one moment. So when we're doing a historical analysis, some of the thought processes we need to go through. I've already kind of gone through materiality and the cost versus benefit. We do not want to be spending, thousands of dollars on a calculation that really isn't getting us much benefit when we would consider our materiality. So when you're considering what is the complexity of the historical analysis I need, one of the things you can do is consider pooling of your employees with similar leave characteristics. So are leave policies similar, and is usage similar? So for example, in a higher ed world, could you do a split between my faculty versus my administrative employees? Do I do an analysis by department, or by school, or by location? If you're somebody like KCTCS that's got locations all around the state of Kentucky, would you do it by campus? Again, you go back to what's my materiality, what's my cost versus benefit analysis, and what level of detail makes sense for me to start doing this historical analysis, and can I make that analysis easier on myself by pooling employees that have similar leave characteristics? You certainly wouldn't want to pool employees that have different leave. So for example, if you give your faculty 5 weeks of vacation per year, but you only give your administrative employees 2 weeks of vacation per year, then probably they don't make much sense pooling those together, because they do have very different leave characteristics. And you may find that your administrative people are taking, almost 100% of their 2 weeks, but your faculty are only taking 50% of their 4 weeks. So, combining those, you could end up with an error in the calculation. So you do want to look at pooling employees with similar leave policies and also kind of similar usage historical analysis. You also want to consider your flows assumption, so FIFO versus LIFO. So first in, so is it earliest leave people take first, or is it the latest leave that people take first? And consider if you've got any administrative policies that actually impact that. So do you specifically state in your administrative policies that any leave that's taken is considered to be the most recently earned leave, or is it the longest earned leave? Because that can obviously impact usage percentage and amount of forfeited leave. So just consider that. Is there any FIFO or LIFO analysis you need to be considering? And then, like I said before, you have to have different probabilities for different leave. So you don't just put all leave into one bucket. If you've got vacation versus sick, you would have different analysis for each of those. If you've got PTO and it covers both vacation and sick, you do not need to do any analysis of your PTO that is like, well, how much of my PTO is used by people to go on vacation? How much of my PTO is used to go on sick leave? You do not need to go to that level of granularity. You have PTO that covers both, and you just need to do historical analysis to see how much of that total PTO leave is used by employees, and you don't care why it is used, whether it's used for vacation, sick, or whatever else. But again, you couldn't combine PTO leave with unrestricted sabbatical, because again, there's probably different usage levels for each of those because they're treated separately. So big picture about materiality, cost versus benefit. What level of analysis do I need to go into in order to get an accrual at the end of my fiscal year that is going to be materially accurate. So at the end of step 3, you've now got a calculation for each type of leave that is accrued when earned. It could also possibly be a calculation by pooling of employees of a percentage that meets the more likely than not threshold that is going to be applied to the accrual at your fiscal year end. And so we now get to code word number 2, or code number 2, 132. 132 is the next number that you need to enter into the conference's IO app. 132. Okay, so the final step is measurement, which really is the easiest to do, because hopefully you've got some good Excel spreadsheets that will be able to just crank these numbers for you. And so in essence, your accrual is going to be made up of the 3 buckets. So the first bucket is for leave that is accrued when earned. You're going to have the number of hours everybody has earned as of the end of the reporting period. You will multiply those hours by current pay rates, unless for some reason you know that those hours will be paid at a different rate, in which case you would use that rate. But do not look ahead and factor in likely pay rate rises or things like that. You don't need to do that. It is at current pay rates, unless you've actually stated it will be paid at $10 an hour, in which case you will use the $10 an hour. But generally, you're going to be using current pay rates. Once you've done hours times pay rate, you're then going to apply that more likely than not percentage, i.e. the usage percentage that you calculated in step 2. So if you've said, I only have PTO, I don't have any other accrual, any other leave that is accrued when earned, I've done my historical analysis, approximately 80% of PTO that people accrue, they end up using or we pay it out. You will do number of hours times the current pay rate times 80%, the usage percentage. If you have accrual that's necessarily, if you have leave that you need to accrue when that leave commences, you would add an accrual for that. Again, remember, when you do that accrual, or you're thinking about that accrual, whether it's material or not. So if you think that's not going to be material, you can just ignore it, and then consider whether any other accrual is necessary for leave that has been taken but not accrued above. So that would be, the leave that you recognize basically when it's taken. So that would be, do I have a payroll that's going to be paid after the year end that has leave in it that I do need to accrue? And for that, you can either accrue it within compensated absences, or more likely what most people are going to do is just accrue that in the normal year-end payroll accrual, and then say it's in the payroll accrual. That's perfectly fine. I don't need to duplicate it within the accrual for compensated absences. Some other measurement considerations, there are some policies out there where employees are allowed to put leave into a pooled leave program, and then take from the pooled leave when it's used. So that leave is not attributable to a specific employee if it's that type of pooled leave. So you don't have a pay rate, one individual pay rate of a person that you can apply to it. You do not have to go through and figure out, well, who put leave into this pool and what is their rate. All you do is you take the pooled leave, number of hours available, and then have an estimated pay rate that's representative of the employees that are eligible to take leave out of that pool. So that gives you some relief there in terms of if you've got pooled leave, not having to go through individual employee pay rates. And the other thing to consider is you do need to include in the accrual any expenses that are directly or incrementally associated with the leave. So when you've done hours times pay rate times the usage percentage. You do need to make sure that includes things like Medicare taxes, Social Security taxes, if there would be any payments to defined contribution plans. So any other salary related beyond just the employee's gross pay. However, you do not include payments related to a defined benefit pension or OPEB plan, because once again, those are considered to be in the pension and OPEB liabilities. But any other directly or incrementally associated payments, you do have to include in that accrued compensation accrual. And again, you can apply standard percentages or standard burden rates based upon materiality. So you don't, again, have to go through each individual person necessarily unless your calculation warrants that. You can apply burden rates or standard rates to the gross pay in order to come up with the directly or incrementally associated costs with that accrual. So that brings us to the end. We're about 10 minutes short of our time. Technically, we only have to go 50 minutes to get a CPE hour. So we do not have to belabor this for 10 minutes if we don't have questions. But I've tried to monitor the chat as I've gone through, and I haven't seen any questions so far. But if anybody has questions, feel free to put them in the chat. I'm also going to bring the slide up, which gives my information. So if you don't ask today, feel free to send me an email with a question. If you have another Dean Dorton contact, I know we have a few on today. Jim Tenzer, Megan Crane, I know is here, but we have a whole team that is in the higher ed space, and they've been working diligently on helping their clients with GASB 101 as well. So feel free to reach out to your Dean Dorton contact as well, and they will be able to answer questions or direct you towards me if they want some help. I am not seeing anything being typed.
Yep, Simon, I think we're good to wrap up. Everyone, thank you so much for joining today. If you did have issues with CPE, I have your contact information, and I will be reaching out if you have some issues with those code words. And we will be sending the recording along with the deck out later this week. Thanks so much for joining us.